Hello traders, welcome back to a brand new video. So in this video I'm going to show you the perfect scalping trading strategy using smart money concept. I will also explain everything that you need to get you started to use this trading strategy. I'll point out the trading plan. Firstly, I will point out the structure that you need. This is the one that you see right here. Secondly, I'll also show you the trading plan that you need to trade this strategy, and thirdly, I'll show you how to place your stop loss correctly, and then lastly, I'll show you how to enter the market in two different ways. So let's get started. As you can see on the right hand side, we can see that we have a bearish setup structure, and then on the right we have a bullish buy setup structure. This is the only structure that you need to trade to the bearish side of the market, and then on the side this is the bullish when you want to take a long trade setup. So firstly, let me explain this. The first step that you need to do is to see that we have a high here and then a low here, and then you have to see that the market has made this move to the upside, breaking this high here, and then after the market has traded above this previous high, you have to see that the market moved lower to make a new low below this low here, and then you have to see that price has made this move with a high here. When you see something like this, when you see this move here, you have to wait for the market to break this high to the upside. You have to see that you have an imbalance on this area and then a supply zone. I'll show you how a fair value gap looks like on a chart. So this is the only things that you need, and then you are going to enter here with a stop loss above. I'll also show you some examples when we move forward with this video, and then on the bullish setup point of view, you have to see that we have a low here. The market will move higher to make a high here. Then you'll see that the market will have a low which is trading below this previous low here, and then once you see that the market shoot higher to break this high here, what you can do is wait for the market to make a low that you want the market to break in the future, and then you will see that you have a high. Once you are on this stage here, what you can do is to identify this imbalance here and then a demand zone, and then you will be looking to buy around this area here. That's how simple it is. So for this structure to work perfectly, you have to also understand the higher time frame analysis. But because we are going to use only one time frame because we want to scalp, in this case we can use the 5 minutes time frame, the 15 minutes time frame, and even the 1 minute time frame if you want more trade setups. So let me show you how a imbalance looks like. We have the same bearish setup over here. We can see that we have a low, a high, and then the market traded below this previous low here to make a lower low, and then we have a high. You'll be at this area once you see this setup. So an imbalance or a fair value gap is a space between a high and then a low of a wick. We can see that this wick right here is not touching this area. It's not like this. If we see something like this, that means the market has already balanced the fair value gap. So but once you see that, okay, right now we have a space in between this area, that's when you can decide, oh okay, I want price action to come and close this area and then touch the supply zone and then move lower. That's how simple it is to identify this structure. So if you don't understand anything, please comment below. I'll make a video in the future covering these topics in depth. So right now let's move on to a real chart so that I can show you these examples. I will also move on to the lower time frame because we will be scalping. I'm not going to use the 1 hour time frame. From this first example over here, let's firstly label our chart because we can see that this one here is a bigger structure. There's also smaller structures like on these areas, but let's firstly look how the market behaved in this section. We can see right now we have the market trading below this previous low right here. We can also use this one because we want to see the market clearly. You can see that right now we have a low, but what we need next is the market to trade above this high or this high. We can see that the market was shooting higher like this. That means price is trading above this previous highs. So we have those trading plan on the structure. So right now we have to wait for the market to make this, and then you will be in this area. But the next step, you have to identify a demand zone around this area and even a fair value gap. Let's find that. We can see right now we have a demand zone. We have a demand zone in this area, and then right now let's find the high. We have a high here, and then let's find the low. We can see that right now we have a space in this area. This one won't be valid because even if we do something like this, we have a high and then we have a space here. But on this low and on this high, this candlestick right here is the one that closed this area, so this one won't be valid anymore. But right now we can see that we don't have any wicks coming into this section here, so this will be your imbalance. This area will be your imbalance. So that means right now you will be waiting for the market to trade below this low and then touch the demand zone and then move higher. This is your trade setup. You'll be waiting for the market to trade below this low and then move higher. And for take profit, guys, you can target this previous high here. This will be your take profit level. And then the next step that you have to do is to put your buy limit order around here, because we don't want to be stopped out very easily. You can see we can still add a few pips below this previous low here, but our entry will be in this. Our entry will be here. If you don't know how to draw supply and demand zone, I think I have made a video before. You can go and check it out in this channel. This will be your whole trade setup. This is 1:10. Let's play back and see how the market played out. And also before we can do that, we can also mark this high here. This is your break of structure because the market broke this previous high here. So let's play back and see. Okay, we can see that right now we are in this trade setup. We are only risking 4 pips and targeting 46 pips. So let's see how the market unfolded. This was playing around for a very long time. And guys, another thing that I want to point out is that don't try to put your trade to break even immediately after you have entered the market, because that will result in a losing trade, because sometimes the market likes to come and retest those areas more often. Let's wait and see. Your take profit has been hit easily. So if you wanted to enter more trades during this ranging market, you have to do the same thing that we have did on this section. We can also find the same structure on this area. So let's try to find it and see if the market made the structure around this area or not. Firstly, let's find where the market traded below the previous low. Is this area. We can see that price action traded below this previous low before moving higher. So the market right now will be in this area. So maybe let's say you are around here. You see this low. That's when you should try to prepare your trade setup. And then the next thing that you have to do is find the imbalance. And we can clearly see that we have this high here, this low, and this high. We can see that there's a lot of imbalances that the market needs to fill. So obviously, because we want to enter at the demand zone, we will take the imbalance from here. That means right now we have an imbalance here, have an imbalance around this area, and then we have a demand zone. We can see that the market touched this zone here and still shoot higher aggressively. That's how easy it is to identify this structure here. It's not even that difficult, but you have to put more time into your charts. So because we did 2 examples on the bullish side of the market, right now let's do bearish structures. And also guys, please subscribe to the channel, so that will help this channel out. So let's move forward. We will also find another pair because we have been doing this on USD CAD. So let's find something else on another pair. This one right here is a little bit more advanced than before, but I will also try to explain what happened here. So the first thing that you have to do in this kind of situation, you have a break of market structure around here, and then you will be waiting for the market to trade above this previous high here. And then right now you have a supply zone in this area. So in this kind of situations, because right now we don't have this high trading above the previous high, but there's a high here. You can see that the market was trying to push lower, and then suddenly it shoot higher above this previous high, and then the market should lower to break this previous low here. And we can also see that we have an imbalance here. We have a wick. Where's another wick? It's around here. We can see that we still have a space here that the market needs to fill before it can shoot lower. So that means we can try to sell on this imbalance area, or we can put our sell limit order around here. So the overall setup will look something like this. This is your whole trade setup in this kind of situations. If you want to minimize the risk, you can still try to enter above here by putting a sell limit order, but I don't believe this trade will work out perfectly so let's see how the market unfolded from here. Okay, we can see that the market triggered here. Stop loss will be above. And another thing that I want to point out is that when you are entering the market here, don't put your stop loss above the zone like this. At least try to put it here by adding your spread size. This will also come in handy because, as you know, other brokers are not good. Okay, so let's try to find another trade setup. You can see this is pretty much easier. I'll use another pair because this one is the 5-minute example on gold. Let's try to find something else, maybe on cryptocurrency. Here we have an example on Bitcoin, still on the 5 minutes time frame. Let's try to explain this structure by doing our analysis. Firstly, we have a high here, and then we have a small major high here. But for this video, I will use this high here. We have this high over here. So right now, what we are waiting for is the market to trade lower and break the previous low, or trade below the previous low. They'll use this one. As you can see, the market traded below the previous low, which is this area here, traded below this low here. So that means right now we are waiting for the market to trade above the high. We can take this high or even this high here and then come to this area and then drop. But before we can do that, let's do something like this. This will be your inducement area here. So in this kind of situation, because you don't even know where to sell, what you can do is just come here, draw your supply zone. On supply we sell, on demand we buy. This is your supply zone here, but we are missing one thing. As I said in the beginning of the video, you need to at least find the fair value gap. We can see that here we still have a minor fair value gap around this area. We can see that this candle, we still have a space in between, so the market needs to fill this imbalance in the market. Let me change this color to yellow to show that we still have a space here. Maybe something better, yeah, maybe our branding color here. So this will be your imbalance area like this. So to sell from here, what you can do, you can sell here. Let me change this, make it bigger, color to white. This will be your sell area, and then your stop loss will be above the zone like this. This space here is just a spread size. Okay, you have to read through the details of the market as always, because we can see that this one is a little bit bigger on the point of view. So let's play back and see how the market reacted. Okay, the market is still playing around. So in this area, that means you will be triggered. Like as I said before, you can still enter the market above this candlestick here. You can still put your sell limit order here, but remember, you're going to miss some trades. It's better to be in the market around this area, even though you'll have a little bit of a drawdown. So that is why risk management is very important. So in this kind of situation, you'll be targeting maybe this low or this low here. So let's see how the market unfolded. We're going to play back like this. Can see that right now the market is just shooting lower. Okay, and then boom, the market dropped very aggressively. You just have to read through the details, and sometimes it can be a little bit harder to find the setups if you're still new, but you have to understand that if you go and backtest, you will see these setups more often. And sometimes it can be a little bit faster. You can see that we have a break in market structure to the upside over here. You have a low around this area. We have a supply zone here. I mean a demand zone, sorry about that. We have a demand zone here. But the market failed on this demand zone because our stop loss will be at this area. That means this move will stop you out. But why? Let me explain that. It's because you have missed this zone below, because we have an imbalance here. we have any imbalance here. So that means by using this one here, the market will eventually take you out very easily. So from here we can see that we still have a demand zone, and then the market traded into this demand zone, and then the market shoot to the upside. With this wick here, the market was shooting to the upside. If you go through the chart, you will eventually see that. And from here, I didn't explain this part here. You can see that we still have a high. The market traded below this previous low here. Why am I saying this is a low? Even if you move on to the 1 minute time frame, you will eventually see that this is a low. You just have to understand how the market moves by just looking at the candlesticks. It's not that difficult. See you on the next video.